moving forward, it is time to take a look at the Williams regression. And this type of oscillator, I put it here. This is a Euro-dollar 4-hour chart, but let me delete it only for showing to you where to be found. So you click Insert, Indicators, Oscillators, and then this is Williams percent range. So you choose the Williams percent range, and this oscillator should be used with the default settings, and the default settings is the level is the level 14, as the value is 14, the period is 14, and the levels are minus 20 and minus 80, the default settings. Now, such an oscillator is being interpreted as first of all, it travels between the 0 and the minus 100 levels, and the standard interpretation is that as long as the oscillator stays above the minus 20, price will continue to rise, indicating a bullish market, with the opposite being true as well. As long as the oscillator stays below the 80, price will continue to fail, indicating a bearish market. I would let's say deviate a bit from that interpretation, and depending on the time frame you are analyzing with these oscillators, the bullish and bearish markets can be analyzed. The higher the time frame, the stronger the interpretation. Now, I actually misplaced the explanation because it is being considered to be overbought at the minus 20 and oversold at the minus 80. But we are not going to use the standard interpretation, and we're going to want for this oscillator to stay as long as possible above the minus 20. This would be a bullish area from our point of view, and we will look to buy calls, or if the oscillator stays below the 80 level, we would like for it to stay below the 80 level as long as possible, because in that area we will buy puts, because we will look for shorts to come. Remember, the higher the time frame, the more important the oscillator. So what you are having here is a 4-hour chart, and this is the level, the minus 20 and minus 80. Remember, whenever the oscillator stays below the minus 80, this is considered to be a bearish market from our point of view, not an oversold, but a bearish market, and the bullish market above the 20 level. What I would also add here, I would add a 50% level. So let's right click here, look at the indicators list, and take the Williams percentage range, try to edit it, and add the level. Let's add the 50, so minus 50. So there you go, you have another level here, the minus 50. So take a look at what price does. This is the moment when price breaks that upper trend line, so comes to the downside here. From our point of view, this is the moment when, that's right here, we are breaking, let's say that this is breaking into bearish territory. And remember, as long as the oscillator stays into this area, so below the minus 50 and keep reaching below minus 80, this is being called a bearish territory, and we are looking all the time, on all the times here, we are looking to, let me take a text, so we are looking to here, looking to buy puts, because we are expecting, so here we are only looking to buy puts, including here. Why? Because price never break into this upper territory, into the bullish market here, let's say to the bullish territory, without reversing quite fast in the very next candles back into the bearish market. So looking to buy puts, including here looking to buy puts. And then all of a sudden price breaks to the upside now, and this is the moment when the price broke to the upside. This is a 4-hour chart, remember. And here we are looking to, as long as the oscillator stays above the -50 and not breaking below the -80, we are looking here to buy calls, and the invalidation level for this, or the reversal level for this, so looking to buy calls, will be if the oscillator goes into the opposite side. Now we can apply this strategy. This is a 4-hour chart. Just wanted to give you some examples, but we can apply this strategy on the 5-minute chart or the 1-hour chart as well. So let's open a new chart, and this is a 1-hour chart. Let's choose the template. This is our template. So on the 1-hour chart, our template, and we'll take the Williams. So insert indicators, oscillators, Williams percent range, put it here, and including on the Williams, as you can see on the 1-hour chart, you can play with the same strategy. Keep in mind that binary options, when you trade binary options, you are trading on a short to very short term. So this is, the level is being broken to the upside. So from this moment on, we are looking to buy calls. So buy calls as long as the oscillator stays here. Until here, you're looking to buy calls. Now this is a 1-hour chart, so you're looking for all the pullbacks to be bought here. The same here. Up to here, you're still looking to buy calls. However, when price stays to the downside here, from here, see, from this moment on, as long as the oscillator stays here up to this moment, so as long as the oscillator stays to the downside, I told you, as long as the relative strength, the Williams stays here, you are looking here to buy puts, only to buy puts as a binary option, because this area is just being the area where the oscillator is finding extremely comfortable in trending markets. So depending on the time frame you are analyzing with this oscillator, the bullish or bearish markets can be analyzed. The higher the time frame, the stronger the interpretation. So in our case, employing a buying call strategy in a bull market, or a buying call strategy on a bear market, or buying put strategy on a bear market should be considered. Now this is how to interpret and how to use oscillators. This is a basic way of how to use oscillators when trading binary options. You can even go on a 5-minute chart, and on the 5-minute chart the same. You can apply the same whenever you are seeing, either you are using it as overbought, oversold, so sell here, buy here, sell here, buy here, sell here, buy here. Either you are using it like this, or when you have price staying into this area, like it stays here. So this is a typical trending environment, and this requires only to buy calls. Typical trending environment, okay? Typical trending environment here as well. Stay tuned of the next recording. With this, the technical analysis recording is the technical analysis chapter is done. We've taken a look at a lot of stuff, from triangles, wedges, rising wedges, falling wedges, and then we've looked at the economic calendar as the fundamental analysis. We even look at a couple of oscillators. There are a bunch of oscillators there you can use for trading binary options. because of the nature, the short to very short term nature of the binary options, I would say that these oscillators are appropriate or suitable for this type of trading for binary options. So stay tuned, we are moving forward to our third part, how to actually trade binary options, and we'll have then real-time examples.